Hello and welcome back to Investing for Generations, your channel for high quality stock research for long term value investors. And today I want to take a look at the Alibaba Group. I took a look at them a few months ago, but then finished very fast because at this time it was clearly overvalued, and so I wasn't too close on it. But then after the last few days, Alibaba Group had a big drop, and so now they are trading at $222, and this is way under the all-time high of $310. And so maybe it's time to take a look at them, a closer look, and then see if it's maybe a buy right now or not, and what to think about Alibaba or Chinese stocks at all. And so the reason why Alibaba just dropped so hard is that Alibaba faces antitrust probe from the Chinese government, and this is because the Chinese government think there could be a monopoly, and so they have to face this antitrust probe. And of course, this can happen. This also happened to Google, Facebook, Amazon in the past. And so maybe this is nothing special. But of course, as in Chinese company, nobody really know what happened there and how big is the impact of Chinese government and what is their goal. And so it seems like a little bit just Alibaba grew too big, and maybe so it's just a question of power or just to show power by the Chinese government, and then maybe just some regulations, or maybe with the Communist Party in China, maybe it's even more, and maybe it's the beginning of the destroying of Alibaba. You never know, and this is why when this news broke, the stock just dropped so immensely because it seems like a lot of trust is broken, or maybe even wasn't there really. So a lot of investors just run away. It seems like that. Is it really time to run away and don't invest in the Chinese market because you never know what the Communist Party will do next and how big will be the regulations? Or, on the other hand, is it maybe time to buy in? That's a question I want to answer in this video, or at least come a little bit closer to an answer to this question. And of course, as always, when I analyze a company, I'll look deep into the financial numbers of them. So I want to go through with you some numbers of Alibaba, and then also calculate the intrinsic value, and then see what I will do and give you my opinion on Alibaba. And Alibaba is really big group of different segments. There's core commerce, that's the biggest segment, cloud computing, digital media and entertainment, innovation initiatives, and others. And so this is really big bunch of different companies in different sectors. And with that, they have right now a market capitalization of $638 billion with a PE ratio of a little bit under 24. And when we take a look at the revenue, revenue right now is at $83 billion per year. And you see this graph from down left to high right. This is what I like as a value investor. It seems like this company is just growing, and this growth, I think, will not stop now. And most of this revenue come from the China commerce, but also the international commerce gets bigger and bigger, and so the position overall of Alibaba just get better and better. And the same we see when we look at the earnings per share. Also here we have stable earnings, and over the last few years very high earnings. Just lately with the pandemic situation, the earnings per share also dropped a little bit, but still on a very high level. and they still working on very good and very stable margins. And also, when we look at the balance sheet, this is a very, very healthy balance sheet. There's almost no debt. There we have a debt equity ratio of 0.12, which is very, very good and very, very stable. And also, the current ratio with 1.99 is great. So the financial numbers overall are just gigantic. It's a great company, a very, very good and profitable company. And next to that, they also have 62 billion cash in hand. So also here in a very, very good position. And also overall, maybe the most important number, the free cash flow, is just rising over time. And so this is a cash machine, a cash cow, which is still growing on very high growth rate. And so overall, these financial numbers are impressive. Alibaba is a great business. I think you really can say it's the Amazon of China. And so, really, really a great business. When we have here a great business like that, a business which makes so much money, is it maybe just a great deal, a crazy deal right now after this massive drop? And therefore, we have to calculate the intrinsic value. And if you want to know more about how to calculate the intrinsic value, just check out my video here up on the screen. You find a link to a video where I explain the intrinsic value a little bit more, a little bit deeper. To calculate the intrinsic value, of course, some numbers are very important. And of course, the most important question is what will be the growth rate in the future. And of course, this is just a guess because nobody can look in the future. But here on Zacks, a very good website, we have an estimate of 20% for Alibaba. And you find, if you search a little bit for the estimates, you find this number of 20% all around. And this is one number we need to calculate the intrinsic value. The other number we need for the intrinsic value is the earnings per share. This was $9.37 for the whole year 2019, and I took for my calculation 2019 because this was the last normal year. And then when I calculate all this together, and in my calculation I even don't take the 20% of growth, I just thought about 15. And when I calculate all of that together with a discount rate or expected return, with my expected return of my investments of 12%, then I come to an intrinsic value of around $250, which is a little bit under the current price. And of course, I like to buy my companies under the intrinsic value, but the around 10% under the intrinsic value we have right now is not enough for me to buy into Alibaba because there is really the big problem of trust. So far, I don't invest in Chinese companies, and the reason for that is that I don't trust the Communist Party. I was born and raised in a socialism country in Eastern Germany. Maybe it's the reason for my skepsis, for my skeptical thinking is just in that, but I don't trust the communists. On the other hand, I think they can't make an example out of Alibaba because they need to trust in their system for all the foreigner investors if they want to be the number one in the world. China for sure have the potential to be the number one in the world, but if they want to be the number one in the world in the economy, they also have to open up the market for investors, and the most important thing is trust. And so, on the one side, I will never really trust communists. On the other hand, I think it's very unlikely that they will make an example out of Alibaba. I'm really not sure about that. And so the 10% of margin of safety I have now in my calculation is not enough for me to invest in Alibaba. When we dive under the $200 mark, or even better under the $185 mark, then we come to the margin of safety to the intrinsic value of 20-30%. And I think then it's really time for me to seriously think about to invest in Alibaba. I think when we really go way under the $200 mark, maybe I will buy a small position. Because even when I will buy into Alibaba, it will be just a small position, just because of the higher risk in the Chinese market with the political system we still have. That's all the reason. And so I will buy in when I think it's really a bargain. And we will see if this will ever happen. Uh, and of course, if it happened, then I will make a video about that, like I do with all the transactions I do in my portfolio. If you're new to my channel, maybe you know you can find um, insight to my real money portfolio on my channel. Here on up on the link you find my whole portfolio. So that's it for today. Thanks for watching. If you find any value in this video, please subscribe to my channel and follow me. And if you really like the video, please give me a big thumbs up, ring the notification bell to never miss another video, and then we will see you the next time with another video about another stock and the weekly insight of my real money portfolio. See you then. Take care. Bye bye.